Okay, we've got to talk about your savings account. Seriously, because that one thing you've been told your whole life is the responsible, smart thing to do with your money, well, it's very likely the single biggest thing holding you back financially. So let's get right into why.
I want you to just let that sink in for a second. This isn't some hot take or an opinion. It's a mathematical fact, and it's a reality the financial system is definitely not designed to tell you about.
I mean, think about it, right? From the time we're little kids, our parents, our teachers, the banks, they've all drilled the same lesson into us. Save your money. It feels right. It feels responsible. It feels safe. But you're about to see it's actually a trap. So here is the fundamental problem. Right here on the screen. Your bank might give you, a tiny 0.5% in interest if you're lucky. But inflation, the rate at which the price of literally everything goes up, that's chugging along at around 3.5%. Your money is in a race that it is mathematically guaranteed to lose every single year. This chart just shows it perfectly. See that tiny little bar? That's your savings growing. And the big one? That's how fast your costs are growing. That massive gap between the two, that's the real story. That's the part of your hard-earned money that is just vanishing into thin air every year. Yeah, your account balance might tick up by a few dollars, but your actual purchasing power, what your money can actually buy, is dropping like a rock. Let's look at the cold, hard numbers, because they don't lie. Say you put $10,000 in a typical savings account. In 10 years, you'll have about $10,500. Feels like a little win, right? Wrong. The same stuff that costs 10 grand today will cost you over $14,000 in a decade. So you haven't saved anything. You've actually lost almost $3,600 in what your money can actually do for you. So why on earth do banks push this on us? Well, it's their entire business model. They take your $10,000, they pay you that pathetic 0.5%, and then they turn around and loan that exact same money out for mortgages, car loans, and credit cards at rates between 7 and 25%. They are making an absolute fortune with your money while you get the crumbs. And this is the single most important thing I hope you take away today. Your savings account is not a wealth building tool. It is a wealth transfer tool. It's designed to quietly and legally transfer wealth from your pocket into the bank's pocket every single day. So, okay, if saving is a losing game, then what's the alternative? What do we do? Well, let's just look at what financially successful people do. They don't just let their money sit there. No way. They deploy it. They put it to work to get a completely different result. You got Warren Buffett, maybe the most famous investor ever, who says that holding cash long-term is one of the absolute worst investments you can make. And think about this one. Mark Zuckerberg, a billionaire, took out a mortgage for his house at around 1% interest. Now, why would a billionaire borrow money? It's simple. He knew he could earn a much, much higher return by keeping his own cash invested, growing way faster than that tiny 1% he was paying in interest. He deployed his capital instead of locking it up in his house. Okay, so what can you do? The good news is it's way simpler than you think. Let's talk about 3 super accessible, powerful alternatives that are actually designed to grow your wealth, not just hold it. First up, low-cost index funds. Instead of trying to be a genius and pick winning stocks, you just buy a tiny piece of the entire market, like the S&P 500. Historically, that's averaged about a 10% return per year. Second, Treasury I-bonds. These are bonds from the government specifically designed to protect your money's value from inflation. And third, you've got Dividend ETFs. These are basically bundles of stocks that not only grow in value, but they also pay you a slice of their profits in cash every single quarter. Now, I know what you're thinking. I can hear the alarm bells going off. But wait, isn't a savings account safe and the stock market risky? This is the biggest mental hurdle for all of us, right? This idea of safety versus risk has been hammered into our heads for decades. But we've got to redefine what risk really means. Sure, your savings account is FDIC insured. They guarantee you won't lose your dollars, but they offer you zero protection for what those dollars can buy. That slow, silent bleeding out of value to inflation, that's not a risk. It's a mathematical certainty. It is a guaranteed loss. And what about market risk? Check out this statistic. It's one of the most powerful in all of finance. Despite all the crashes and panics we've seen, the Great Depression, 2008, you name it, there has never been a single 20-year period in U.S. history where the stock market has lost money. The real risk isn't the short-term bumps in the road, it's doing nothing for the long term. Now, this quote from Robert Kiyosaki sounds harsh. I get it. But he absolutely nailed it. And it's not because saving is a bad habit.
It's not. It's because the main tool we're given to save, the savings account, is part of a system that is rigged against us.
All right, so let's turn all this knowledge into action. This isn't something to just think about for a few months. This is a simple 1-hour plan you can literally do this week to completely change your financial future.
It really is this simple. Step 1, log into your bank account and find that interest rate. Step 2, Google the current inflation rate and see the gap for yourself. Step 3, open a brokerage account online. Companies like Fidelity, Schwab, or Vanguard make it super easy. It takes like 15 minutes. And step 4, figure out how much you need for 3 to 6 months of emergencies, keep that accessible, and transfer everything else to your new account. And here's what that looks like in the real world. This isn't some big, complex, scary thing. On day 1, you open the account and start the transfer. A few days later, the money arrives. Within a week, you can go from losing your purchasing power to owning a piece of the world's greatest companies. And by week 2, you can put it on autopilot with automatic monthly investments. When you boil it all down, it comes to this one fundamental choice. It's really this simple. When your money sits in a savings account, the bank makes money from you. When your money is invested, you are the one who gets the opportunity to make money from it. Look, the system is designed to keep you a saver because that's how it profits. But you don't have to play that game. So the only question left is, now that you know how the game is really played, how are you going to choose to play it?